Hello all, welcome to new Bharat Consultants. I'm Santosh. I have 20 plus years of experience into investment. We are exclusive partners with ICICI, ICICI Bank Loans, ICICI Prudential, and ICICI Lombard. Prudential for life insurance and ICICI Lombard for general insurance. You can get in touch with us at 958 My number is fairly easy to remember. It is 1234, and you can get in touch with us on email info@newbharatconsultants.com and a website to give you more information www.newbharatconsultants.com. Today I'm here to discuss about a product from ICICI Potential, which is called ICICI PRU Gold. Now this is called PRU Gold because it has an it is a 4-in-1 plan. That's what I feel. uh, because it has a savings element, it has an insurance element, it has an annuity component throughout years, and it has an endowment. That is, you get at the end of the policy matures, right? At that point, you still get some amount of maturity. So it is a 4-in-1 policy, a beautiful policy which is designed by ICICI Prudential. It's true. Before I get into explaining about this product, I would like to tell you a couple of things. Let's discuss about the common things in our life, in a middle class common life, actually. Uh, the first thing I would like to discuss is about why we need to invest into the future. We have four major reasons for any person to invest into the future. One is we only invest or we only insure so that if we are not there, our dependents have a good life. Insurance and investment is not for us. Maybe some part of investment is for us, but most of it is for the dependents in case if we are not there, so that their life is secure. The first thing is I'm talking here, it's like in a simple sense, I'm talking about a term insurance policy. Just in case we just say goodbye to this world, sort of goodbye to this world, there is some kind of an term insurance amount which goes into your dependents, taking care of your spouse and your children. For a small budget kind of a person who invests like 700-800 rupees a month and get a some 1 crore insurance, something like that. Now, the second reason why we invest is, or we take a health insurance policy is, in case it because of soaring hospital bills, we want to make sure that tomorrow, if you end up falling sick and end up in a hospital, there is somebody who can pay our hospital bills. That should be an insurance. This is getting very popular in India right now because this is already a popular product in other countries, but in India it is gaining a lot of popularity. And the third reason why we invest is for kids' future. Very simple, kids' tuition fees or get them. And the last reason why we invest into the future is when we retire, we have some money so that we can have a good life. That's the four reasons. Now, when we move to the next slide, now here something is like question mark versus being smart. We have two options. We pay interest or earn interest. What do we usually prefer? 90-95% of the people, what do they prefer? They only prefer one thing, which is earn interest. Nobody wants to pay interest, but it's unfortunate that we all end up paying interest with banks, with home loan, car loan, or whatever. We keep paying the interest. But usually everybody likes only one thing, which is earning interest. Now, how do we plan financial planning for our child? You have two components. The first component is this bit where you save little money every month so that you enjoy interest after 20 years or 25 years, which is equivalent. It is some way good to invest to for your child's education or get them married. That's the first thing. If you don't end up in this one, right? If you don't save today, obviously at that point of the time to perform the marriage, we borrow money and start doing the marriage or sending the children for education. So here I would like to tell you one thing. Anybody whom I approach as an investment consultant, financial planner, The first thing anybody would say is, sir, no budget. नो बजट, पैसा नहीं है, 1 रुपया भी नहीं है। 100 रुपए कमा रहा हूँ और 100 रुपए का खर्चा, 105 रुपए का खर्चा। I'm earning 100 rupees and I am paying 105, and my budget is so tight that I end up at 105. Use my card and again pay that next month. So I don't have any budget, no financial planning, nothing. I'm tight. Agree to you. 100% agree, you don't have money at all. Here I would like to give one example. Okay. Just to make it this presentation not so boring, I'd just like to tell you 2 minutes of a story. The other day, I was at a parents teachers meeting. My child is in LKG. So basically, many parents were there, and out of which the teacher has told me like, I want to talk to you for some time. So you just stay because I'm going to have a lengthy talk. In the meantime, let me finish this 2 3 parents. The next child was like, came marks list. I was shocked. It was 49 by 50. The child got 49 by 50. And you know the first question what the mother has asked the teacher, where did my child lose 1 mark? Where? And the teacher just looked at the parent and just said like, well, your child did not lose any mark anywhere. I can't give 50, so I have to cut down somewhere. That's the only reason it is 49 by 50. I was like really shocked. The parent is not looking at that 49 marks is secured, but she's worried about that 1 mark. Thanks to her, I mean, I really appreciate the way she is looking at things. For a child, 4-year-old child, to get 49 by 50, she might have worked very hard. She might have sacrificed hours of TV. She might have sacrificed a lot of things in cooking because she's cooking or she's doing some home housework or something. Then she can't give so much of time to the child. She has given tons of hours to the child so that the child acquires 49 by 50 in the exam, in the quarter two, in the midterm examination. Right. So here at home, assuming that she might be a homemaker, she has put a lot of effort for the child to get 49 by 50, and she's worried about that 1 mark. See, that's the level of precision uh, that lady is looking at. I really appreciate, salute to her. In the same way, the her dad, the child's dad, must be working very hard to earn the money. Now, let's assume normal dad working very hard, homemaker taking care of the kid and making sure they get 49 by 50 and all. Now, if the male spouse is working so hard outside, but he does not save any money. Now, here you see, cut down on any of the expenses, right? The child will end up getting it 15 marks or 20 marks. If the mother would have not cut down on, or if she has not sacrificed all the hours, or she might have spent if she had spent all the hours watching TV, the child would have not, I'm sure she would have not got 49. In the same way, whatever the parent is earning, right? If he doesn't save enough, the child will not have a future. Simple example. Whatever he earns, if he cut down on his whatever things, whatever his personal things, or whatever, wherever he could cut down, right? If he's not cutting down, the child will not have the future what the mother wants to do. Simple. Let's close it. Let's move to the presentation. Now, save money. That is, you take an investment come insurance plan and you start paying it for 18 years or 25 years or whatever time period you can, so that you have a corpus fund and you enjoy the interest post. If you are a parent at 30 35, then obviously save for 20 25 years so that they have sufficient money when you are retiring at 60. If you don't do it, you got 100 rupees and you spent all 100. Done. I totally agree. You don't have money, you have commitments. Agree. Now, when the child, at the age of 60, when the child is 25, right? You don't have money to perform the marriage. You want to go to a bank and ask for a loan, bank will reject it because you're too old. You go into the outside market and try to take it at 3%, 5%. Try to perform the marriage, done and dusted. After that, you work for another 15 years, do something or the other, and pay the principal and interest. Very simple. Every child, every parent will say to the child, "You don't study today, you'll repent tomorrow." The same thing I would say to every parent: you don't save today or you don't insure today, you are paying it tomorrow. Very simple. And you will not have money to invest in insurance or investments today. I agree. But the second thing what I want to tell you is, you don't do it, you don't have it. So it's up to, I leave it to you. And it's a very simple way how you can manage it. Assuming you earn 100 rupees, start thinking 20% should be the investment. You do the budget only for 80 rupees. 80 is what you're at. 20, you forget it. You will have a bright future. Kid will have a bright future. Let's move on to the next slide because I'm taking too much time giving examples and explanations. Okay, now we move to the next slide. Excuse me. Now, what are the features of this policy? Let me straight away jump into this policy and give you the frequently asked questions on what exactly this policy is. See, this policy comes in various forms and shapes. This is the way we go to a tea stall. You ask for a ginger tea, lemon tea, and green tea and all that, right? But normally, 80% of the people go for a normal tea. So you assume that this is a normal tea. You want a green tea and all, you can customize this plan in so many ways. That's a different concept. Now, entry, anybody from 0 to 60, a newborn child till 60 years, you can enter into this policy. The objective of the policy is to ensure, to save, accumulate, and enjoy. Investment, you might not have a very big pocket, but ideally, you should start with at least 5,000 monthly, which is like 60,000 yearly. The premium payment, first year, you try to make sure that you pay it in a lump sum. Swipe your card, get that money or pay. Very simple. And second year onwards, you will pay it automatically. And the first month, because you swiped your card, very simple, you have to pay it off. So you'll pay it somehow or the other. So very simple. Investment period, I would say this comes in various forms and shapes. You can customize it. But I would ideally say invest for 12 years. You wait for 1 year. Okay, post this 12 years of investment. Your income period starts from 14th year till 99 years of age. So basically, you invest on a newborn child, 1 year old or 1 month old child. You invest for 12 years, done and dusted. 13th year, nothing is there. And 14th year, when the child is in 10th class, the income starts flowing. So you have money to fund her college education. You have some kind of funds when she is earning, when she just passes her 10th class 10. He or she passes 10th class. Now, if you don't want the funds at, if you don't want to have, excuse me, if you don't want the funds at the age of 14, so just let it accumulate. Don't touch it. It will automatically grow, and you will, because it's everything is system generated, everything is system based. So you're not losing anywhere. Automatically, it adds value to your fund. Now you can get 80% of your surrender value. You paid for 4 years. You can't continue the policy. You come to us. I will tell you what is the surrender value of the policy at that point of the time, and I'll get you a loan of 80% at that point of the time. Now, income withdrawal after 14 years, right? How you want to withdraw? You can withdraw as a pension like monthly, or you can withdraw like a bank interest like a quarterly, or yearly, or a special date. For example, you can gift it as a birthday gift for your child. If your child's birthday is 1st January 2024, then on 1st January 2024, a certain fixed amount will be deposited into her bank account from 14 years till 99 years. So the child, you have started investing at 1. So 12 years you have invested, 13th year is blank, and 14th year onwards, till she attains 99 years, there is a birthday gift into her account every year. Okay, and it has a life insurance cover also. She will have also get a life insurance cover for 99 years. So when the child is born, you have planned their investment, you have planned their gift, and you have also planned an insurance for the entire 99 years, right? Now, income withdrawal, this can be done on any of these format. And policy term, this is the whole life cover for 99 years. Income benefits. See, here it can be like, there are two ways how you get this benefit. Half is partially guaranteed, and and the half component and some component is partially depend upon how much bonus the insurance company has it. So bonus is nothing but, for example, ICICI, they got a premiums of 100 rupees in a year, and claims came out to be only 60. So that 40 rupees will be spread out. Very simple. So that is called bonus. So it can be any number at any given point of the time. So over a period of the time, एक साल में कम हो सकता है, 1 year it can be lower, and the other year it can be higher. So it just goes up. The tax benefits, as per the prevailing tax laws, you get the tax benefit for this. Now you are investing some amount, so whatever that you invest, you get a tax benefit out of it. And just in case you assume that you pay for 2 years, and if you start the policy, you pay for 2 years, and you don't have the capacity to pay, you won't get anything. So at least I would suggest to continue for 3 years, and then you get a surrender value. So basically, uh, for example, I paid for 3 years, now I can't pay it. So basically, you can surrender the policy and say that, boss, I can't pay, whatever is the value, just give it to me, and the bank just call me, and I will tell you the surrender value, and we'll give it the value to you. And in case you have not done it for 3 years and you got a gap of 2, 3 years, you just left it like that. You can revive that policy after 1 or 2 years if the situations are not good. For example, you started a policy, and for 2, 3 years, 1 year it was very bad for you. Stop that, okay? And fifth year you come back to me and say, sir, I want to revive the policy. I can revive the policy, and it continues. Okay. Now these are the simple basic questions, and I'm sure I have answered everything whatever an ideal person would have in his mind. Now we move to the next slide. So whatever I told you in oral format, I'm just showing you in a pictorial format, in a picture-nice picture. So basically, assuming the child was born on January 1st, 2024, you invest 1 lakh rupees for 12 years. In the earlier example, I told 5,000 a month, 60,000 a year. That is for somebody who just want to start off. And this example is based on 1 lakh, so that the numbers can be easily framed up. Okay, this 1 lakh is like it will give you a very easy way to calculate things. And in normal, somebody who's earning from 5 lakhs plus or 7 lakhs or 10 lakhs plus, right? I would ideally suggest go for a 1 lakh policy, because that gives you a very decent returns. You invest for 12 years, you give a gap for 1 year, and your income is starting from January 2038. From January 2038 till January 2123, she's going to get certain amount on her birthday as a birthday gift. How much is that amount? That is what is the question. And she also gets the life cover. The life cover is like she's also going to get the life cover of 15 lakh rupees throughout her lifetime. Throughout her lifetime, she's going to get 15 lakh rupees of life cover. Now, there are two components to this. One is, the first thing what we're looking at is the income part. There is a guaranteed income which ICICI will pay, and the rest is the cash bonus. This cash bonus, I have given two variants. One is 4% and one is 8%. At a rate of 4%, how much would it be? At a rate of 8%, how much it would be? Usually, this 4% they take it because most of the banks savings deposits give you at 4%. Most of the fixed deposits will give you at 8%. But here, if you invest in this, you may say, like, what's the difference between investing here and in a fixed deposit? Because fixed deposit is something different. It is fixed. You cannot. It is not liquid for you. And fixed deposit rates can change. It is only fixed for 1 year or 2 years. Third year onwards, it again changes. And the other thing is, you don't have an insurance element. Here, you have an insurance element, right? And for example, but usually bank does well, and hoping touch wood, ICICI will do a lot better than 8%. So we can expect some greater number, greater percentage when you are withdrawing them. Now, so basically this you're going to get it from January 2038 to January 2123. So she's going to get it for a very long period. Only 14 years, 13 years has gone, and the rest of the, like you're talking about 86 years, she's going to get at an 8% rate We're talking about 1,30,000 rupees per year. Now, the second bit is besides this, we are talking about a second bit. There is a guaranteed lump sum amount she's going to get. That is, you paid 12 lakhs and she's going to get back the 12 lakh rupees when the policy matures. That at the age of 99, she's going to get back the 12 lakh rupees. Plus, you also get this terminal bonus. I'll explain about this terminal bonus. We'll go to the next slide. We'll finish that and then come back to this so that it will be easy for you to understand. Okay. Now, here in this slide, just let me tell you. Before we get into the technicalities of this slide, right, maybe arrange my screen here. So here, let me explain you the components here first. See, the policy year, I have put it for 12 years, then a 13th year gap, 14th year, and a 15th year. After that, I have jumped 5 years. In the sense, right, I can't put every 99 years in one sheet. So I've taken 20, 30, 40, 50 till 99. So we are paying a premium. Premium amount is for 12 years and we are paying every year 1 lakh. There is a guaranteed component, which I told you in the previous slide. You're going to get 52,250 rupees. This is guaranteed. There is a death benefit, which the child will have it from the day 1 till 99 years, which is 15 lakhs. There is a maturity benefit, which is 12 lakhs, which I told you in the previous slide. This 1 lakh rupees, which I told you, she's going to get it. Now, here, when we come to non-guaranteed bonus, as I told you, that 4% and 8% in the previous slide. Let's assume the bank does at least 8%. It will usually do about this to please their customers, actually. So this is, let's assume if it is doing at 8%. Now you can add survival benefit is something, right? This 52,250 plus 7,500 at a rate of 4%. The minimum is 59,750. And the medium number, which is 52,250 plus 77,750, which is going to be 1,30,000. In simple terms, you invest 1 lakh. I'm sure you would get 1,30,000 from 14th year till 99 years. This flow continues till 99 years. No stoppage anymore. If something happens to your kid, like at any point of the time, right? At any point of the time in life, till 14 years it is 15 lakhs. Now till like 70 years it is 15 lakhs at 4% rate of interest. At 8% rate, it changes from here. From 12th year onwards, it is changing. So if something happens to your kid, assuming at the age of 70, your grandchildren is going to get 1 crore 45 lakhs 54,640 rupees. So basically, you have secured your child's future in such a way that she gets a lump sum amount every year. Something happens to her. If nothing happens, she keeps withdrawing that money, everything is fine. If something happens to her, your grandchildren is going to get her death benefit. Obviously, your grandchildren are going to thank you for that. I'm sure they'll say, I love you, grandpa. Had you not done it, it would have been different. I mean, it's a very common thing. And your child will really appreciate you taking this policy because every birthday she's going to get some amount as a birthday gift. Now, don't argue with me on one thing. So, what is the value of 1,30,000 after 20 years, after 50 years? Because how much are we invested? 1 lakhs. We are taking the benefit for 99 years. There are customers who come and say, sir, what is the value of that? What is the net present value? What is an IRR for that? Everything. See, boss, how much are you investing? You are getting an insurance benefit. Okay. And you are also getting these benefits. And every year there's some amount which is going to come. How much is going to be the net present value? I cannot calculate because you are not investing 12 lakhs at a straight in first year. So today you are investing 1 lakh. Next year, if the inflation is 10%, you are investing only 80,000, 90,000. Next year, again, if the inflation is 10%, you are investing only 80,000. So, and you are not investing everything in one form, right? And at the same time, whatever you are investing, you are getting the best of the best benefit. You can compare with any product. I don't say like, I mean, you compare with the stock market today, and don't take my words like written on stone. I'm just telling in a normal sense. These kind of the returns, or else let me say like these kind of the returns are pretty decent compared to many financial products. Maybe that's a fair statement. to to avoid a lot of comments. Yeah, among lot of financial statements available, I feel this has got some decent returns. Final statement. Now, but then death benefit, and your child is doing, I mean, at the age of 50. Let's assume she is at the age of 50, and she don't want to take this 1,30,000 going forward. She wants to surrender the policy. At the assume at 50 years she want to surrender the policy. She can withdraw this 40 lakhs. And at the age of 60, she wants to say that, boss, I don't want to continue this policy. I want the funds. She can surrender the policy and she can get the 72 lakhs. At the age of 70, good, 1 crore 45 lakhs, 54,006. Good amount. How much are we investing? If you take the net present of values of all these things, also 12 lakhs, we don't get a flat. 12 lakhs, we are not getting a car, proper car also for 12 lakhs. An EV car is costing 15 lakhs. And this 12 lakhs, we are not investing at one way, in one shot also. Every year, we are investing only 1 lakh. When by the time you come to the 12th year, if you're taking the inflation number and all, right, this can be very little what you're investing. And you're waiting for 1 year and reaping a benefit of 1,30,000. So, if you look at the positives of this policy, it has got everything. It has got a gift. It is giving you a gift. It's like a fruit gold kind of a thing. And it is giving you a death benefit. Something happens to you. If you don't want the policy, you can surrender the policy, take the value of it as on that date. You can look at all these things on the mobile at any given point of the time. You can call me or my consultancy. We can tell you the value, whatever it is there. You can call up ICICI to find out the same because I am servicing. You can always give me a call. I'm always available. And at a certain point of the time, if your child wants to keep that money, like at the age of 20 or something, you don't want to withdraw the funds, but you really want to take some kind of a loan or something, you can still take a loan and keep this running so that it always accumulates. So, for example, kid attains 20 or 25, and you have some very good fund. At that point of the time, instead of you encashing that money, you let it accumulate. And whatever is the fund value at that point of the time, right? I can get you a loan. Use that loan, and as whatever things you can just repay it and let accumulate till she gets 25, and you encash this funds at the right marriage time. From 18 to 25, let it accumulate. You manage it, or 25. You can do various ways. You can plan your thing. You don't do it. I'm telling you. I'm telling everybody, all my friends. I always tell you, boss, put some money for a rainy day. You don't put it. You don't have it. Simple example. We always tell our child that we don't study today, we don't have a future. Similar way, we don't invest today, we don't have a future. Me being an investment consultant, a financial planner, a financial advisor, always suggest save something for your day, cut down on whatever you can, save some percentage of the money, whatever you can for your rainy day. At the age of 16, nobody's going to, very few will get the money. I'm talking about a general block. You're running for funds for performing a marriage. You're running for funds for your child's education. And you can always give back the reason to me stating that because I didn't have the money at that time. Yes, and most of our parents would have given the same answer. We didn't have the money at that time. But imagine they would have sacrificed something or they would have done something or they would have consulted me. I would have given a financial plan. I would have told like, boss, if you don't invest, I mean, just imagine I'm getting 1,30,000 rupees every year. And my dad has taken this policy on my birthday. Say, Papa, I love you. Even though everybody's gonna. So think about it. If you want more details, you can always reach out to me. uh, in various forms and shapes. So basically, on a mobile, it is 958 1234122. Fairly easy to remember. 12341. You can email it to me, and we have the social websites. You can always reach out to me on LinkedIn, where I use most of it. So you can always mail it. I'm a licensed guy, so I have an IRDA license for life insurance, IRDA license for general insurance. I do all kinds of loans. You want a personal loan? You don't have money, you want to loan, you come to me. You have money, you want to invest somewhere, you come to me. You don't have, you come to me. You have, you come to me. So it was really nice talking to you guys. If you need any more information or if you would like to invest, right, please do give me a call. It's 958 or you can always WhatsApp me. Thank you so much. Really appreciate your time for watching this video. Thank you. Jai Bharat.